Alright, welcome to our recorded lecture on taxation of resource projects, renewable resources. Alright, so our content, what is primary industry, trading stock on livestock, allowances and deductions for primary production, investment in primary production and its losses, and timber operations. So when we talk about primary production, the sectors the nation's economy includes agriculture, forestry, fishing, mining, quarry, and the extraction of minerals. So in section 4 of ITA 1959, primary production means production resulting directly from the cultivation of land, the maintenance of animals or poultry for the purpose of selling them or their bodily produce, including natural increase, or fishing operations includes the manufacture of dairy produce by the person who produced the raw material used in the manufacture. In resource company such as agriculture, renewable resources, so we have trading stock. That's obvious. Those are grown and bred stocks or livestock in this case. Okay. And of course, you either sell it, right? So the selling price can be uh, depending on what the seller will decide. But when you record it as trading stock, you can record it either at cost price or market selling value. And the valuation at the end of the year must include any natural increases. So, for example, of course, the livestock will grow, so that you have to measure it. But the valuation will be determined by the primary producer. Okay. This must be lower than the minimum price set by regulation. Now, the pricing is given in Regulation 8. We will have a separate recorded lecture on that. Now, to value the livestock, it's common that they use the average method. So what it means is that they'll get all the sum of the cost plus the valuation of natural increases, and then the sum of that, it will be divided by the number of stock available. So how to determine the balancing, okay, of the livestock accounts? So use the average cost to calculate value of stock, yield, and closing stock. Okay, balance the number, which is the quantity, okay, the number of uh, left to right column, okay, and balance the value from right to left column, which will be discussed in the next tutorial session. So in recording and making sure that you have the right valuation on livestock, always use the average cost. Now, allowances and deductions for primary production, we have when it comes to expenditure on new plant or articles used in agricultural production, you can qualify for 100% initial depreciation. So what does it mean? All the expenses you made or incurred in having a new plant or articles, you can claim 100% deduction at initial stage. Primary producers can also avail for full deduction of the capital cost of clearing, preparing for agricultural plant of land, eradication of pests, construction of laborers, accommodation, and conservation and conveyance of water. Now, when it comes to plant, those are the machineries, or in this case, beasts of burden that you're using to operate your business. It's not your inventory, okay? It's not the one that you grew and then you sell the produce. It should be the animal that you use to, or can be used to, producing more product, okay? Not the stock, okay? Not the one which produces the stock also. Now, investment in primary production, incurred primary production costs by primary production company. You can transfer this tax as tax deduction to the shareholders, but the deduction should not exceed the total amount paid on their shares. Okay, so if you decided to do that, you have to inform through lodgement, okay, of declaration with IRC. Okay, of course, 2 months before the end of the financial year. It happens when you have a production cost that is actually higher than your production revenue. Okay, so that will be in another lecture, separate lecture on this. So, how long you can claim for the loss? It says here, not it's not subject to 20 years limitation, which is common for the losses. Okay, so which means until you incur that loss, you can always claim that. Okay, you can always claim that, and as soon as it's cancelled out, of course, that's fine. But the common limitation on losses, remember in other discussion, will be 20 years. Now, in primary producers, it's not applicable. So if a taxpayer has an assessable income from other sources greater than a loss incurred from primary production, then no loss is deemed to have occurred for tax purposes. Okay, the reason is because you can claim that loss that you incurred on your primary production to other operations. Okay. Now, timber operations and logging companies may deduct as expenses the capital costs incurred in building access roads, port facilities, provision of housing and amenities for employees, provision of structural improvements for the process of timber. And the total cost is deductible, of course, 15 years, okay, which is lesser, okay, or whichever is lesser. If it is 15 years, then you can deduct 15 years. If the useful life of those resources that you have, facilities that you have, will be less than 15 years, of course, you use that. Example, if it is only 10 years, then you can only depreciate it for 10 years, okay, within 10 years. So calculated by dividing the unamortized balance of qualifying capital, okay, again, not more than 15 years, okay. Costs incurred to reforestation of the logged area by the timber companies are allowed as deduction in full for the year in which incurred, as well as indefinite carry forward losses. So if you incur costs on reforestation but you incurred it and it create tax losses, you can carry forward the tax loss indefinitely. Unlike in other operations, ordinary company can only claim up to 20 years. That's it. Thank you for listening to my recorded lecture. Hope you learned something.